Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Monday, July the 31st, 2017. Please forgive me if I sound off. I'm a bit under the weather, so I do apologize for that. I did want to at least put an end of the day video together for you instead of leaving you hanging. All right, so far looking at the weekly chart, looking at the NASDAQ. As you can see, momentum carried over from last week, and so far the market is flat. Pretty much finishing off where we finished left off on Friday. So really nothing to talk about just yet. We have a high that was made of 59.95 and three quarters. I think it still wants to march to 6,000. So we'll see what happens. And we do have this incredible arching slope. So I don't see any correction, no sign of it coming just yet. Today is the last day, though, where I do see that the topping pattern should be forming. So, without any rhyme or reason, the market can pull back. It can just do it for whatever reason. So, just be prepared from this day forward. Um, Trade what you see, but be ready to stop and reverse. All right, you got to be prepared to stop and reverse. All right, especially when you're talking about these indexes. All right, moving right along. Let's take a look at how FANG is faring. Starting off with Facebook. All right, so Facebook, same thing. All right, came off of a nice high last week, and so far a little quiet today. Not a lot of noise after hitting the 175.49. Mad sloping coming up, but we do have a bit of a period of breakage that could take place between now and October the 16th. All right, so we'll see. Between now and October the 16th, it can correct, and then it should be finished by the 16th if it does correct from here. So far, no sign in sight of that, but like I said, you just never know. Take a look at Amazon. Amazon just keeps right on going, as you can see. 1,083.31 is the high, and it's been starting to really pull back here. So watch the Amazon. It seems to be leading the way toward a correction. First support's around 964.30. If that does not hold, then we go back to the median of 865.65. All right, so be prepared here. Look to have some tight stops to lock in some profit. So if this thing's going to correct further, you don't wipe away all your gains with it. All right, looking at Netflix now. All right, excuse me. Take a look at Netflix. Netflix did pretty good with the 190, 150, but it's been pulling back ever since. Now, although there's really no significant commitment to the downside, nevertheless, this is the second week now that we're building in a row of downside activity. So definitely want to watch that. All right, so this is a key. Need to stay above 173.57 on the Netflix. All right, basically all it's doing is just pulling back from this elongated breakout bar here. All right, so if it's going to continue to pull back, it just needs to close above 173.57. So still a lot of wiggle room to go on this one. All right, let's go switch to Alphabet now. As you can see here, this one has been consolidated after hitting its high of 988.25. Now, since then, we've been basically just moving sideways, okay? Not a lot of price action to boot on this one. So even though we're having consolidation outside of the Kumo cloud, especially top side of the Kumo cloud, it could be signs of a topping pattern as well. So going to have to watch this one because it does have room to fall to 849.08 from here. Now, this one should be finished around October the 16th. All right, any kind of consolidated correction, and then we start to trend back up again. So we'll see where we go from here, but signs that the market could possibly be running out of steam. Looking at our main indicator here for this rally is XIV. Last week, XIV finished at 96.91, just shy of 100. And you see here that it pulled back and closed red, and then so far this week, we're starting off red. I don't really buy the correction on this one just yet. I think it wants to go to 100, maybe even 101. I don't see any sign of a possible correction at this point, and we do have some rampage along the way. So if anything, we just could consolidate for a little bit, but on this one, nah, there's no sign of any kind of real correction. But like I say, things can fall out of the sky, without warning. Just like I say, be careful. Need to stay above 89.93 on the close this week, and I think that momentum will carry it over, and we'll see 98 as a high. If not this week, then possibly next week. So that's what this is looking like thus far. Looking at another indicator, let's look at this euro yen, which tracks with the stock market. All right, looking at the euro yen, you see here, this one has been, marching up too. And we have a little bit of a gulf, if you will, between now and November the 13th on this one. And then it stretches out until December the 11th. So anything that's going to jump off here, I don't really see it per se. We do have a gulf, but this one's a little bit weird. I think we'll probably see a drop off and some wild swings in the consolidation range, but I don't see this switching into a bearish position at all. All right, so the euro yen is showing that the stock market strength is pretty powerful. A close above 129.09 will help momentum carry over into next week on this one. And I don't think we've seen the highs in the euro yen just yet. So looking at the major indicators, I don't see anything suggesting any danger. I think anything that will happen will just be from a technical perspective, just a trading aspect. A bunch of people decide to take profit at the same time, which will happen if certain intraday price inflection points are met. So be on the lookout for the price inflection points. If you're not a subscriber to the Black Ops Trading Room, you have no idea what I'm talking about. But for those of you who do, you know exactly what I'm talking about. All right, so look at those price inflection points. Be prepared to stop and reverse if stopped out of long positions. All right, let's keep it moving. Let's look at the miners at this point. We'll start off with GDX. GDX so far, quiet. Made it above the trendline resistance and struggling. All right, we have not seen any get up and go from GDX so far this week. And it is bumping up against major resistance, not to mention we're at the bottom of the Kumo cloud to boot. And much pressure will keep prices at bay, below $23 more likely. So we'll keep an eye on that one. GDXJ. GDXJ, same thing, but it's a little bit different. It didn't get to the median, which is the long-term trend line resistance. It got to the intermediate, and that's at 33.53. So I don't think we have enough in it just yet to get to 34.80. If something pops off this week, then that momentum can build and get prices there, but then it's still going to be in trouble because the struggle is going to be at the bottom of the Kumo cloud once you get up to around 36. So I don't know. We'll see what happens, but even down in here, it just doesn't have a lot in it. There's not a lot of commitment. It's just been basing out here. Looks like it could be building a support. But then we don't really see any liftoff to suggest that. So still early, it's just Monday, and these are the summer doldrums, but still, we do have the propensity for some bars. I don't see any bars. I don't see any breadth to this. So we'll see. Maybe it'll just appear out of thin air one day. So we'll have to watch and see. All right, looking at gold. Gold right now is stuck in the mud. It did bounce from the low that was put here, but it's still stuck in the mud. Last failed breakout was here, and it looks like we may be trying to do a repeat of the same. All right, so I don't know. I'm just not convinced that it's ready to do anything yet. We're going to have to get all the trend lines up over the Kumo cloud, and we're going to need them to start pointing north. They're going to have to start lifting up. We need the momentum behind the price to lift this market. And so far, we haven't really seen it yet. Every rally seems to be sold. This rally got sold. This rally got sold. This one will probably be no different. Seems like 1300 is the top. As you can see right here, 1300 is the top. And then we basically got support down here. The 1206 is the bottom. So you got basically almost $100 of trading range that the market's just ebbing and flowing through. Nothing's changing. We'll have to see. We won't get our hopes up just yet. All right. Looking at silver. Silver just keeps going down, 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 down. Every rally with the silver most certainly gets sold. This one's the longest running one we had. And since then, every time the market ticks up, it gets smashed. All right. This one could prepare prices well below $15 if it fails here. This is a very key important part if it's going to do something. $17.10 is where it needs to close. But then all it's going to do is get in this very narrow air pocket of resistance below the Kumo cloud at 1740. There's just a lot of overhead resistance right now. It's like silver needs to get the cement block off its back, and I don't think it can do it. It's just not looking like it's ready yet. We're just getting smashed at every turn. We'll see. These are things that we're looking at so far for the week. Natty gas, no different. Natty gas, no different. We keep this grinding lower and lower and lower and lower and lower. All right, so it just can't get its act together inside this Kumo cloud. It is struggling. There's really no lift off in the Kumo cloud. We're just looking at slightly lower prices, sideways to slightly lower prices. Now, the one caveat is since we're right here at the bottom of the Kumo cloud now, around the support, could get a bounce here. Only question is how much of a bounce? Because you're still inside this cloud. And this thing goes on and on and on and on and on and on until December the 4th. That's right. Excuse me. Will the market continue to move sideways until December the 4th? It's a good question. Don't know the answer to that one yet. We'll have to wait and see. Something will have to spark this market. And it's funny because we're looking at the commodity space now, and you would expect a lot more liftoff because of what's happening in this particular space, the US dollar. I'm not really seeing it carry over. The US dollar is in free fall, but commodity prices are not roaring like this is roaring. This is just a straight slope down. It's gaining downside momentum. Excuse me, there's nothing to stop it. We're into that 92 handle, like I told you. I think they're going to bring it all the way down to around that 90-ish level, and then that's where it's just going to rip and roar, and just crush anyone who's shorting it. It could go from here to here in one bar. Don't ever think that it's impossible. Supernatural moves can happen in the dollar. The dollar can run 5, 6, 7 points on you. I'm not kidding. It can do it. All right. Depends on how bold the Fed wants to be with their dollar policies. I'm just saying. All right. So if they want to ram it back up, they'll ram it right back up. Right now, they just let it go. They still got room. They don't have to panic. They got 2 more points to go. 2.84 points to be exact. All right. Almost another 3 points that this thing can fall and still be in the hot zone, in the bull zone. All right. So don't get it twisted. At the end of the day, this dollar can still get back above par and go to 114, 120, 121, 122 on you before you even realize what happened. All right, then everybody will be, crying foul. So just be careful. You know what I'm saying? And be ready to stop and reverse. If you're short, you should be locking in profit on the way down anyway. Excuse me. Don't get caught, you know, unaware. Watch those intraday um, and price inflection points as indicated um, on your sheet. All right, those stops are there for a reason, so you want to use them wisely. All right. All right. What have we not covered? I think that's pretty much everything for now. Pretty much a quiet day, not too much happening. Do yourself a favor, come on over to the Postwave website, postwavetrading.com. Learn how to trade these markets. Learn how to create an extra income stream for you and yours. Learn what the central banks don't want you to know before it's too late. Don't get left in the dust. All right, we're in the summer doldrums, but trust and believe it's not going to stay that way for long. When these things get ripping and running, you're going to want to be positioned correctly, then be on the right side of history. Postwavetrading.com. Remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.